We'll try and delve in deeper detail on two topics in particular on Editor's Cut this morning as usual. Alex, what do we have in store?
Morning, Niraj, and morning to everybody else joining in as well. We're looking at the oil marketing companies and the stocks of which have dropped quite precipitously over the last week. But if you zoom out, the picture changes quite dramatically. And you will notice that they're not off their highs by a very large margin, at least two of them. And the second topic, if I may draw a parallel, back when we were in school, we used to wait for a report card. There were a few of those notations that your teacher or your principal made that you would dread quite significantly, right? So for the Indian pharmaceutical industry, I guess the equivalent would be the USFDA and any observations that they would have through 483. What we're trying to give our viewers is a bit of an understanding of what the latest observations are and whether or not the Indian pharmaceutical industry is scoring well on the parameters that it needs to. But let's start with the Okay, let's start
with her?
Of course we can.
This is so interesting that we may just drop off my thing, really. It doesn't matter.
So let's start with the report card for the Indian pharmaceutical companies. Of course, all of this comes because you spoke to the country head, Monal, of the USFDA over the weekend. There are more inspections, but what is the key detail as to why those inspections are taking place?
Yeah, it was a very interesting conversation that I had with Sarah Macmillan, who's the country head. And she did say that there's quite a ramp up in the number of inspections post-COVID. Of course, there's a little bit to do with the fact that they've not earlier inspected during COVID, but it's also that now a lot of companies increasingly want to export to the US, so it could also signal that. So an increase in the number of facilities. My conversation with her brought about, so just talking about what are the issues that they are now persistently seeing. So it's data integrity. And now, of course, I've been looking at a lot of 483s of late, and if you realize, there's always been one issue there. You have complaints that are raised by the customers, but all those complaints are not really seen through the end. As in, there's just it just so happens that the complaint is raised and then it's left open. So not enough investigation is done into it, and that is a problem that's consistently brought up. So
one second, I'm so sorry. I'm going to have to make this even simpler, right? When you say 483s, you're talking about a particular form that has been sent out by the USFDA to these pharmaceutical companies, in which they list out certain observations based on inspections that they're doing. One of those observations is data integrity. But what does that entail?
So it typically deals with quality. So now it could mean that there's a quality issue in terms of the manufacturing process that's put in place. And the conversation with her also indicated that a lot of Indian facilities are sort of old. And there's a regular upkeep which may not be happening. So that was something that she was alluding to. And it's an interesting fact because my conversation with a lot of other analysts, pharma analysts out there also indicates that maybe a lot of facilities are old and the cost of upkeep is quite high. Versus we're always seeing a margin pressure in terms of price erosion in the US, right? That's a common question. So that's some trade-off that you have to manage.
The other aspect was whether or not, as a percentage of the inspections that are being done, whether observations are significant. And I think the answer to that question is positive.
It's positive. It's surprisingly positive. The number of observations you're saying have gone up, like the observations are there. But the official action indicated, which means that now the company would have to follow the USFDA's directions to resolve the issues that are happening at the facility, have actually lowered. So that is definitely a positive. Most of these inspections are clearing and are ending at a VAI, which is voluntary action. So the companies decide on how to remediate, so they're not that serious.
Is that because Indian pharmaceutical companies and the administration here has been pushing for an improvement in quality?
Absolutely. So in December, we had a revised Schedule M. So Schedule M deals with quality and the upkeep of facilities and the kind of, the standards that you are supposed to maintain in terms of manufacturing. So that has been revised and it has been brought up at par to the European import standards. So that's a positive. Now, if this were to actually come into place, which will take some time to play out, but in general, we should see that an overall improvement that is going to tackle with the spurious drugs issues that we've been suffering since the past 1 year. So it should tackle that. And overall, yes, there's going to be an improvement in quality. Let's hope for that.
But yeah, I just want to lay it out for the benefit of our viewers that Monal, this is on back of an exclusive conversation that you had with the head of USFDA in India, right?
Yes.
Yeah, so this is not some analyst or anything else, which is also very important, by the way, not decrying anybody. But the USFDA's views top the list of the most important voices.
I got a chance to listen to a slice of that conversation, Niraj, and what I thought was very interesting is from the perspective of somebody that studies the sector, she was asking the country head of the USFDA, what's the best way to read your 483s? So she was saying...
What was the answer?
Yeah, so they list the most... the difficult issues at the top, and that's how in the order of importance, and the most prominent ones are at the top. So that's how we have to look at it. Every time, watch out for the order in which we put out the observation list, and you will know how detrimental it is.
Okay, so I must point out that the conversation that we've been speaking about right now is going to play out in just a bit. In fact, on India Market Open as well. So do stay tuned for that. Niraj, let's shift very quickly to the OMC conversation.
Yeah.
Because as I was pointing out, some of these stocks have seen quite a bit of a drubbing over the last week. But in a larger context, it's not a big drop.
It's not a big drop. By the way, it's topical because Morgan Stanley's come out with a note today, and they are bullish on OMCs amidst all the flurry of negatives. And Citi last week mentioned this as well. But I'll make this very quick. So look at the data firstly. 1 year returns, BP, HP, IOC, 92, 146, 128%. That's the 1 year return, right? So there is a significant upside that has already happened. The last, from the highs, BP is down about 6%. HPCL down about 8.3. IOC is down 17%. So 17% for a stock which is actually in a good run is good. Now, there are a few notes that have come out which are negative. So say I chose CLSA. You can choose any of those, but I've chosen CLSA. Why is it that they are negative on OMCs? None of the concerns that CLSA mentions are about business. All the concerns are about valuations relative to global peers and otherwise. So CLSA says stocks are pricing in much higher than historical marketing margins, stocks are pricing in continuation of near record refining margins, and stocks are trading at notable premium to the global peer average EV/EBITDA multiple. No concerns on business, by the way. No concerns on whether something else is coming to the fore individual company-wise. So that's the first thing. It's a valuation concern, not a business concern. Part one. Is there reason to be optimistic? And you know, there are a clutch of people who are optimistic as well, including Morgan Stanley today. So very quickly there, FY25 earnings outlook is still very strong for all of the OMCs, by the way, pending any crude price upticks. Now, that's an imponderable. You can't really dwell too much on it. Sure. So that's first. The government, remember, has deferred the capital infusion plans and has brought it down from 30,000 to 15,000 crores. So lower equity dilution and deferment of that equity dilution, which is also to some people a positive. Third, the companies individually are doing great. We highlighted this in an earlier editor's cut. BPCL's net debt, as per the management, is 6,000 crores. Net debt 6,000 crores is the lowest in its recent history. So therefore, that's a net positive too. And then when you look at multiples, Jefferies, for example, has come out with a note on multiples. They say that the peak cycle multiples for OMCs, as they've seen in the past, leave room for further upsides from where they are right now. So that is part one. They see over 36% upside for BPCL, by the way, if we go back to the Goldilocks scenario. So that's part two as well. And that could be multiple things, you know. I mean, they enjoyed peak cycle multiples in calendar year 14 to 17. So that's to be kept in mind. So keep an eye out for that, that if indeed the sector, if the government doesn't intervene too much on the pricing, if crude doesn't go haywire, then we might see peak cycle multiples as well. And therefore, a buy on dip strategy, as Citi was recommending, is not ruled out. The only other risk that I see, which is maybe non-business or otherwise, but nothing company specific, any cut in the retail prices of diesel or petrol, which the government...
It's an election year.
But the government has shied out thus far, right?
Correct.
So that's a positive. A crude price rally of 7 to 10%. They may raise worry on marketing margins as well. And any fuel taxes post-election to meet the fiscal deficit glide path that the FMS laid out for that, and large global refining capacity additions. But aside of that, there's no business risk that people are pointing out. People are only pointing out to valuation risk.
Absolutely. All right. So there you go. And also on the crude part of it, we've seen over the last year and a half, it's been more or less range bound. within a certain band, because at the higher levels you see more supply coming through.